Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. It's the 25th of October, 2 months till Christmas, but no mood for celebration in markets anytime soon. It looks another big collapse on stocks led by the Nasdaq, which was down over 4% last night, 4.6% in fact. The S&P was down 3.1%, and the Dow fell 2.4%, which was a more than 600 point sell-off. This is getting a dangerous time for stocks, and in many ways, I'm not sure if I've said it or I've written it, but I've been thinking it for ever since it kicked off. I know I've said it when I've been talking to Your Money. One of the issues here is that because there was no obvious catalyst to the selling, there's no obvious circuit breaker, save for the Federal Reserve coming out and saying, hey, we're just going to ease off, see how this works out. And nobody said anything like that yet. Just yesterday, we heard from Bostic saying, hey, all these issues, they're not really hurting the economy. Then the Beige Book today was talking about moderate growth, but prices being passed on, which we heard from Bostic yesterday, tightness in the labour market, all the things that the Fed's been telling us that they're a little bit worried about. And to that extent, when you heard from Robert Kaplan saying 2 or 3 more hikes, Roberta Mester saying, Loretta, I should say, saying that rates need to go to 3%, or she thinks the long-term rate's at 3%. You end up with, this pressure, upward rates, which supports the US dollar and really doesn't give a circuit breaker for stocks. So we've got them down, and they're down substantially. EU futures are down. The physical market was not. Australian futures got absolutely belted. They're down 94 at 5,700. The US dollar's bid, but dollar yen didn't fall that much. Dollar yen, when I last checked, was about 112.12, only down 0.2%. Gold is at 12.33, only up about 0.25%. The Swissy hasn't moved. That's because the US dollar's strong. So that's going to colour a lot of what goes on with these safe havens. It could get worse before it gets better. And the reason I say that is that we haven't even seen in a macro time frame. So think about it in terms of a weekly time frame or a monthly time frame. Remembering that I believe that markets are fractal and time frames are fractal. So you can use your Fibos on your 1-minute charts in the same way that you can use them on your 15 minutes or your hours or your 4 hours or your dailies or your weeklies or your monthlies. So to that extent, I want to talk about some of the longer term targets, I guess, for the Nasdaq. And let's kick off with that. We'll do stocks first, then we'll do forex, then we'll do commodities, and then we'll quickly talk about Bitcoin. I'll try and keep this succinct. There's so much to talk about. Also, have a look at Markets Morning, the written piece. They are complementary. Not everything that I write there is going to turn up here. Not everything that I do here or say here is going to turn up there. Anyway, here's the Nasdaq 100. This is the chart from Markets Morning Note this morning. And all I've done is just really simply said, okay, we've been in an uptrend. The uptrend's broken. What's the garden variety retracement that I would expect? Now, I always say that 38.2% retracement levels are garden variety. So to that extent, in a futures-based CFD, where is that level? That level is 6367. So that for me is the medium-term target for the Nasdaq. I'm going to show you the local market, the SPY next, because I've got that chart up already. This is the weekly SPY also from this morning's report. And what you can see quite clearly here is even though we finished at around 5,700, a break of 5679 will knock us down to 5421. Now, did you notice anything about these last 2 charts, folks? Trend lines. If I could only do one thing on a chart, it would be draw a trend line. Now, I know a lot of people poo-poo that, but there's a simple behavioral reason behind why I like trend lines. Other people are looking at them. When you've got a 2-touch trend line, it's only tentative. When you get that 3rd touch and that reaction, that bounce off, then it's a good trend line. This one has had a few. The other chart that we just looked at has had a few. What do we got now? We've got a break, a retest, a failure, and now we're going lower. All right, my target is 5420 for the local market. Now, let's dive into the LIBOR charts. Now, this is really messy. But if we put this to the weeklies and we say that that's the rally, 2644 needs to hold. If 2644 does not hold, then we're looking at 25.51 as a full round trip. Now, if you think about the SPY chart I just showed you, and I've written this today, I love full round trips. You often get, so a move back down to 38.2 does not negate the uptrend or downtrend depending on which move it goes. Then you get the 50 and start to think, well, heck, once you get past the 61.8, then you're really just thinking of a full round trip. So a full round trip to 25.51, but we've got this two-touch tentative trend line, which comes in, if I can pick that up, about 2600. And then we've got the 100-day moving average at 25.75. You'll notice I never talk about moving averages. I think they're overrated. I use a 15 and a 30 as a crossover, as a medium-term trend. So it's worth noting that another week of this and they'll have crossed over. So they're the levels. 25.50 to 2600 is about where you might just say a reasonable pullback is for the S&P. Dow Jones falling out of bed. Weeklies on the Dow Jones. We just pull that one across. You could see this is only two touch, but 24352 is the number to watch. We've got durable goods out tonight, obviously. That could be influential. Now the DAX. The DAX is there, basically. I had an initial target of 11,000, as you know, and I've got a medium-term target of 10,000. 10,000 is on the basis, if my weekly works, of basically head and shoulders. Shoulder, head, shoulder, and it projects down to 10,000. So 11,000 first stop. You know, that would be normally where I would cut some positions, but and I know that a lot of people, you know, write to me and say that you're mad, blah, blah, blah. I really have always struggled with holding positions that are in the money. So it's just the way that I do it. I start with my full position size at the start, and then I scale out. That's just how I trade. It enables me to sleep at night. Let's find the euro, and we'll talk about that. So, pardon me. So, euro broke 114.30 last night. Why did it break 114.30? Well, it broke 114.30 because of this. This is the market. This is flash PMI last night. This is the IHS Market Eurozone PMI, right? Last night, it was down and undershot expectations. The US, so we saw 114.30 break then. The US, on the other hand, rose and exceeded expectations. So think about the beige book that I talked about before, you know, strength. Think about what Loretta Mester said, Robert Kaplan said. Think about the ECBs tonight and Germany's slowing and European growth slowing, and you've got economic and policy divergence again. This is a key thing for me. It's been a key theme for me all year. So what is my target? My first target is that 113 low, 112.80. That's, for me, as simple or as difficult as this gets. Now, longer term, right, then I'm looking at, if I draw some extrapolations of these moves, I've got 108.10. I've talked about this in the note this morning. 108.10, and then below that 104 to 105. So the euro, as many of the Elliott Wave folk are saying, the euro could be in for an absolute belting between now and the end of the year. Dollar yen, in contrast, is starting to break, and if these stocks go off, it will continue to fall. I think it's pretty straightforward to say that if it gets down through 111.96, then you're talking about, you know, 110.40, 110.50, 60, somewhere like that down here, and then we'll just see how bad it goes. It's a question of how strong the US dollar is going to go. But so the move there, of course, is going to be euro yen or sterling yen. You know, those kind of things. I think last Saturday, which one was it? That was euro sterling. So euro yen, for example, last Saturday. What did I write? Euro yen downtrend, daily downtrend intact. Big rally from Thursday's lows, Friday. Stocks rebounded. Low 128.30 now important. So this morning it's 127.80. So that's broken, which would suggest a substantial move lower. I've identified a break of 127.70 to 128 as ushering in 126.40. That's what I did last Saturday. So euro yen might be a way to express that sell-off, and obviously Aussie yen's going to be the same. Sterling's broken and gone. It's now below 129.20, so I'm now targeting 126.60. Theresa May did okay yesterday. She seems to have spoken to the 1922 caucus and been received well. That's the backbenchers. So that's good news for her personally. But we're still no closer to Brexit while we try and deal with this Irish issue, which is important, and we need to deal with it. Now, dollar CAD still in this range. Bank of Canada was not dovish. I thought they might be. They were not. They were actually quite hawkish. Both Governor Pollers and Wilkins said that they'd removed gradual because they felt, and Pollers said directly, the feedback from the market was that meant a hike every couple of months, and that they wanted to convey that that was not the case and that every meeting was live. So while ever the data holds up, just like Jerome Powell, the Bank of Canada is live, and that was the point that Wilkins wanted to make. So naturally, we're in this downtrend still. Now, if dollar CAD can take out this high, that's going to be a really bullish sign for the US dollar in a broader sense. But this is a good cycle. We could probably down cycle is what I'm trying to say. We could probably just draw that there. Put that there. I thought that might work here. It's not perfect, but it's close enough. And we can say on the downside that 129.86, last night's low was sort of 129.80. If 129.80 breaks, then you could see a substantial fall towards the bottom of the range. But that's kind of the levels that I'd be watching in dollar CAD. Have I talked about the Aussie yet? No, I don't think I have. Let's have a look at the weekly on the Aussie. That's not the chart I want. I'm going to switch. One of the problems I've got now is that I've actually got 30 odd charts that I look at. This will take a minute or so, that I look at each Saturday, and I've got monthly, daily, and weekly that I look at. And so there's starting to be a divergence between what I'm looking at in my own trading and then what we're talking about here. And the reason I stick with the old way in terms of charts is because, as you just saw, there was a lag of 15 seconds or so. So if we look at this in a weekly basis, you can see that if the Aussie falls off this 70-40 ledge, it could collapse. Now, yesterday, I said that I'd taken off my structural shorts. I needed clear head to think about what I thought about the Aussie and what I thought about the impact of, the market already being short, the lack of long bond positions that needed to be sold and those kind of things. So what I've decided to do yesterday when I got back from the conference I'm covering for Business Insider was to go short again. That was about 70.85, I think. And I will ride this and see how it plays out. Mostly because I saw the euro break, I saw stocks, all that sort of stuff. So I just needed to update you on that. And you can see, as I say, if 70.40 falls, then we'll be talking about 69.5 or 68.5 pretty quickly. But that's got to break first. Let's go back. This will take a little bit, folks. Oh, it's actually quicker. Kiwi is the only one we haven't looked at yet, so I'll bring the Kiwi out. Oh, actually, we might look at the yuan as well. Sorry about this; it's not responding. We'll get there in a sec. There we go. One of the good things about MT4 is it saves everything as you do it. But one of the bad things about MT4 is it saves everything while you do it, so that when you've got a lot of charts on a screen like I have here. What do we got here? I think the best way to look at Kiwis like that. So far, we've had a false break, so we'll keep an eye on that. If durable goods are weak tonight, and if GDP undershoots, my short Aussie is going to look like a stupid trade, and euro will be back at 115.20. But the soft data, PMIs, things like that, aren't suggesting that that's going to be the case. So Kiwi's rolling over again, and it does look like it's going to head down towards sort of 64.90, and if that falls, then we're talking about low, sort of that 64.40 region once more. Let's go to gold. I'll get the skates on. Gee whiz, 14 minutes. My goodness. Sorry, you can see on the daily when it comes up, it's starting to accelerate. So my estimation is that we are going to get a run to 12.51, 12.52. So that's why I'm playing it. Support's going to be 12.20 from here. In terms of copper, I've got no idea what happened in copper last night. It was up. It's a down day, but it's an up day, if that makes any sense. Why it was up, how it managed to hold up, I don't know, but I do know it's in a range, and I'm not going to do anything unless either side of that range breaks. So that's 271, on the bottom side, and 286.5 on the top side. Looks like 271 is more likely than not to give way. If that gives way, I would be expecting that 250s high is what I'd be looking for. WTI did actually quite well. You can see this ugly candle actually quite well in the face of 6.5 million build in inventories that actually went up, which makes no sense. But people rationalize it by, well, we know it makes sense because it's not unexpected after a day like the day before, 4%. And to that extent, there's no guarantee that there's more selling in stocks tonight. But that does not mean, if stocks don't go down again tonight, that does not mean they are out of the woods. Just look at China. You have 2 days of rallies and then it gets hosed again for the next 2 days. It's been consistently doing that. So anyway, back to WTI. That was all about gasoline and refinery runs. And realistically, if you're in there every minute of the day trading oil, what you would have known is the path of least resistance, because everyone was on one side of the boat, was for a push higher. So all it takes is a little bit of buying and you get that. But now that stocks have come off, we've seen it back lower. I'm still targeting 64.5 for WTI. In Brent terms, I'm starting to target $70, 70, 71 or thereabouts. It's back in this range as I showed you. Unless it gets back above 80.50, my bias is for a retest back towards the lows, which is about 70.28. And so on that basis, that's going to be my target, my medium-term target for Brent. I just want to quickly talk. I forgot to mention China. It's just slowly eking its way higher. That's a very definition, isn't it, of an uptrend. A bit of a range. We broke out of the range. Right? We made a higher high, then we made a higher high and a higher low, then we made a higher high and a higher low, and so far we've made a higher low. We haven't made a higher high yet this week. So we'll keep an eye on that, because if China does get to 698 or something like that, heaven forbid gets through 7, all heck will break loose in global financial markets. One of the key things is that crashes happen after falls. Sustainable ones anyway. So it is a dangerous time, and heaven forbid if all the money in ETFs wants to get out. Anyway, I'm going to finish up. Bitcoin going nowhere, bigger fish to fry somewhere else. If you can make 4% by selling short on the S&P or on oil or the more developed markets, well, then that's where traders' interest is going to be. So I will leave you with the weekly S&P and just say, have a good day's trade. Durable goods tonight is huge. The ECB tonight is huge. What will Mario say? Is he interested in trying to talk up the EU economy and the goal of hitting inflation? He might try, but we'll have to wait and see. Anyway, plenty of water to flow under the bridge before week's end. I will talk to you tomorrow. Bye for now.